right, guys, give me 1 second and I will be going live here. It like just kicked me out of my Thinkorswim, so I have to log back in here. And then we'll get started talking about the challenge for this month. I want to go over the Apple trade that I was spying into the close on Friday, yesterday, as well as talk about IWM. Just as a longer term setup, I think it's looking good. So, we might get into it in the challenge, or, if you just want to take it yourself, if you have a higher risk tolerance for your account, right? It might be something you consider. There we go. Oh, they're undergoing maintenance. Well, of course they are. Well, what we can do then is we will just go with the backup of Tastyworks for their charting platform. It's not as clean yet as Thinkorswim, if we can't get data on Thinkorswim, but it will do the job for what we're looking for. So which is always a good reminder, guys. So if you only have one trading platform, right, and you run into issues like this is the problem with it, is when one goes down for maintenance, especially when it's during market hours, it can be the most frustrating thing in the world. So having that backup one always gives you the ability to trade. It always, ideally, if they both have charting platforms, it gives you the ability to still chart and look at trade setups, as well as being able to manage or open things if you want to, right? If something's really setting up. So it looks like it's good to go. It's showing up for the charts on Thinkorswim. So let me go ahead and pull that up here. So I need to, looks like, modify the size of this. There we go, just a little bit more. Hey, so you guys should be able to see now Apple up on the screen. It's the daily chart here that we're looking at. And overall, I was liking the setup into the close for a few different reasons on a few different time frames, which to me looked like a good setup for at least seeing some sort of bullish sentiment into the end of this month, which is perfect for our monthly challenge. Going into the close, though, I don't typically like to take this setup on a Friday on the daily chart. It was making a bullish divergent bar. So for those of you who don't know, that indicator typically means that there's a good probability of a higher high within the next couple of trading days. I usually give it up to 3 trading days to see if it can follow through, which means that there's a good chance Apple will get back above 152.20, right? That's about $1 move. That would allow for certainly a quick profit at the minimum for us to take, depending on our strategy. So that's looking good. But on top of that, right, we recently broke the ATR trailing stop, switching that from resistance to support. So that's starting to turn bullish. We came down here recently to test the 100 period simple, which also ended up holding as support. With that momentum, crossed above the 0 line. We had a squeeze that started to fire. And this indicator here is a true low indicator. And basically what that does is it helps determine where a discount price might be to buy shares or to go long on an overall bullish trend. And the setup, the last time this printed back here, right, it was kind of a discount price, and then we had a nice run to the upside. And of course, everything overall is still up on Apple from that price point. So we had that print not too long ago. All of that, right, all of that, for those of you who might be listening to this and are like, I don't even know what that indicator means. The thing to take away from it is that it is showing bullish strength. So it's indicating to me that Apple looks like it could continue to move to the upside. Let's go over to the weekly chart, right? Longer term for people who maybe wanted a long-term setup. The weekly chart also printed a true low signal not too long ago, right? So we see that that happened here back in about March of this year, and we have had a nice move up since then. We also had it print back here in 2018, right, at these lows, and back at this low here, and overall the move has been to the upside. So Really great buy-in levels. We, got it again recently, which is what I really like to see for longer terms. If you're considering shares or something, I know I like that level. On top of that, we have the squeeze. So for my simpler trading folks, y'all are very familiar with this indicator, but for those of you who are new to this indicator, it's called the squeeze, and it is amazing. It's one of the best indicators I have on my charts that I like using. And the idea behind it is that it builds up, turns into these different colored dots, right? And what you really want to see is it turn into these purple, red, or yellow dots. And what that basically means is that the price is building up energy. And typically, it happens when the price is consolidating, and it tells you that you're going to see a greater than anticipated move either to the upside or to the downside once that squeeze, quote unquote, starts to fire, right? Once we start to see it turn back into green dots. And so we're building up that pressure again, basically, which means we could be sitting in consolidation a little bit, right? Might want to be mindful of getting out at the highs here if it looks like we're going back up towards 156, 160 and stalling again on, a shorter term trade idea. But longer term, if you can hold out through this consolidation, that is a good sign that if everything remains bullish on this time frame, which currently it is, right, that this squeeze could fire to the upside. And what I like about this setup right now is momentum, which can help determine how long, right? The strength of a trend and how long it might go. Momentum starting to build back up into green bars, which is a bullish sign. And if you notice, right, it has plenty of room to move to the top of the axis. That's usually when you start to see exhaustion levels. The last time we had a run up, right, we saw this beautiful point move to the upside, this beautiful bullish trend on the weekly. Not to say it's going to be exactly like that, but to me, that's a good sign for bullish strength, especially when I pair it with that recent true low. So given that sentiment, I like seeing Apple to the upside, but let's also flip to the intraday charts because those are also starting to build up in our favor. On the 4-hour chart, this is starting to print a squeeze as well. So once again, it's building up that pressure, which means the price could start to fire sooner than later, at least on the intraday levels, meaning if this squeeze does end up firing, maybe that's the catalyst to get us back up into the highs or into that 160 level, right? That would benefit us for a bullish trade. It's still more in that consolidation phase for me down here. So once again, still might be sitting in some chop. Maybe that means we lean more towards a credit spread, something that benefits from that theta decay before taking further action, or doing maybe a more directional trade, right? Being a little bit mindful of that. But overall, this is turning into a bullish trend. So if we can start to see this pick back up, right, if support levels can hold here, I'd be anticipating the squeeze to fire to the upside. When we go down to the hourly chart, this is also building a squeeze. We're starting to get some bullish signals on our lower indicator. And once again, support levels are holding. The simple moving averages are technically remaining bullish. So all of that is still looking good. I believe it's also building up on the 30-minute chart. Yep. And so when this happens, right, when you have all these lower time frame squeezes starting to build up, the good thing about that is when one starts to fire, it can sometimes trigger the next one into firing and so on and so forth. And so if we do jump into a bullish trade here, right, if we are able, let's go back to the daily chart. If we were able to still find a good entry, if this doesn't immediately pop to the upside on Monday, then we might be able to play, right, for a move back up, if it opens lower, back up into 152, if not back up into the 155, 160 range. So with that being said, let me pull up Apple here on the option chain. So of course there are a few different ways that you could trade this, right? The first one, the easiest one, would just be to do something like a long call. Let me move that over here. There we go. So if you wanted to do a long call at this point and you didn't jump into this trade earlier, you might consider giving yourself a bit more time and going out to January expiration. That way you can play the overall seasonality of the quote unquote Santa rally, right? For that bullish sentiment that can happen going into the December, into the end of the year. And you have time to protect yourself against theta decay from that, as well as giving yourself some time off that weekly squeeze, right? Off that longer term potential trend to the upside. Now, typically, if you have a larger account, right, I would like to go with the 0.7 delta, right around there, because one, that means I'm starting in the money. So ideally, if the price remains flat or continues higher, my strike already has intrinsic value, meaning ideally I don't get that full capital risk loss on the trade. And then, of course, if the price is moving to the upside, for every dollar, basically the price moves, I'm getting basically 70 cents because my delta is 0.7. So it means that I'm getting a better profit potential for every point move that's actually happening on the underlying price, right? Now, for us, it wouldn't make sense to go with something like the 135 or 140 strike, because this is, even on one contract, almost $1,400 of capital, and we're trading a $500 account. The idea behind this account is to, of course, see how much we can grow within a month, right? It's a fun challenge, but it's more importantly to teach you about capital risk, right? Introduce you to capital risk in a very small way to begin with, so that way when you go to trade larger accounts, you can be mindful of that. So with that in mind, we will probably be playing more off the intraday squeezes, right? And bringing our expiration a little bit closer. That's why I mentioned that we might be ourselves closing closer to the 155, 160 level, depending, once again, how we open. We want to make sure everything's still looking bullish, right, on Monday. But I was either looking at going with the November monthly or the December monthly expiration. Now, the November monthly is relatively inexpensive to where we could actually go at the money, right, with a 0.4 delta. So that means roughly every dollar move, we're getting 40 cents. And of course, the further it goes in the money, that higher the delta becomes. So you guys get the idea there. It will keep increasing the deeper it is in the money. Of course, there's open interest, right? There's a lot of liquidity on the monthly expirations on Apple. Most of the expirations, right? So I'm not too worried about being able to jump in or out of this trade. But you can see here the cost basis is about 177. So it's relatively inexpensive. Now, the benefit for us not opening this on Friday, if we do decide to go with the long call, is if we did this with November monthly expiration 13 days out and we're not like nicely in the money, that theta decay is going to hurt our trade. Even if we are in the money, it's still going to hurt our trade some. And what theta decay means, for those of you who don't know or are new to options trading, it is basically the value that this strike currently has, right? Technically, the price is trading below it. So this value is $1.77, but if we were to go into November monthly expiration, and let's say Apple's trading at $1.50, this strike is technically worthless. The reason that it has value now is for the possibility, right, that it could start to move in the money. And that possibility also has to deal with how much time is left into that expiration, right? The closer you are to expiration, the less likely we're going to move to 165. The further out in time until expiration, right? If we were to go to January and go to the 165 strike here, you can see it's a lot more expensive because you have a lot more time. You have 76 days to try and get up to or above that level. And this, of course, is in the case of a call. So we could go with something like that, or we could look maybe more at a vertical spread to go with here, right? Something that's still a little less expensive. It's going to limit our profit potential, but it still allows for the profit to continue to go. Hey, Governor FOMO, great to see ya. Yes, looking forward to F1 this weekend. I hope you guys are too. Really quickly, because I am doing this during nap time, and it looks like they are about to get up. So I just want to introduce you to the idea. We're looking at Apple, might do the long call or vertical spread. The other thing I just wanted to highlight really quickly before I do have to go here is IWM. IWM has been in consolidation all year long, literally all year long, right? It's just been in this choppy range, and it's something I've been eyeing for quite some time. And unless you've been building into the trade at support, you've been basically waiting to see when this is going to break out of the pattern, and it's finally starting to do that. And when we notice the bullish sentiment down here, right? When we notice the squeeze, momentum's low, but it's trying to build up and it has plenty of room, right? Plenty of room to move to the upside. Then, this could go in a nice trend for a while or certainly continue higher. Now, it's not the best opportunity to open this on Friday unless you're doing like a small capital amount and you're building into the trade, right? Because this could just stair step higher. But I did also want to bring this into focus because I do want to try and look for a trade idea on IWM for our challenge this month, because overall I think this is going to go up into the end of the year at least. But on the daily chart, what kept me out of it on Friday is, we're just a little extended, right? And so what I don't want to see on Monday is the market pulls back a bit into support. And then that would have, of course, been the much better entry level to jump in at. So I'm just going to remain patient on Monday, kind of see where this one's trading at before we decide to put on anything if we do. But Apple, I'm definitely going to keep an eye on. So be on the lookout. I might open this one closer to market open. Typically, I wait until like the last hour or 30 minutes of market to open the majority of my trades. But because this was a setup we are eyeing on Friday into the close, if it still looks good Monday morning, I'll probably just go ahead and jump into it at that point, and we'll see, how it goes for the rest of the market day and so forth. So thank you guys for joining me on this quick session. I appreciate it. The video will be able to watch here as well as on YouTube, so check it out if you just came in partway through. As always, for my Star Wars fans out there, may the trade be with you. Have a fun race weekend for my F1 fans, and I look forward to talking with y'all again next week and hopefully opening some new trades, right? May the trade be with you guys. Bye.